Hello guys, today this is gonna be a quick video on explaining Binance Futures. So, how do you open the Binance Futures account? I'll leave the link in the description. So you want to go on your Binance account and it should say Futures on the top left of the corner. And then once you click there, you come to this screen. Now, that's how it's pretty simple to open a Binance account, and transferring your USDT to your futures account, it's right here as well. So you just want to hit transfer, and then you type the amount of USDT you want to transfer. So, and yeah, that's pretty simple. So Binance made it really easy for the average user to open an account, transfer the money, and really simplistically use the website. So quick overlook on the website itself. Here's the order book on buying and selling, and if we see in the top left, we could change the time frame. So maybe like 5 minutes if you guys are fast traders. So 5 minutes is pretty good time to trade in. It depends on how you like to trade, obviously. There's different time frames. If you want to have indicators and more specific tools for you to make money and take profit, is you can use TradingView as well. So they put TradingView into Binance Futures, so it makes it a lot easier to the user for using different type of indicators and charting out the price action of Bitcoin. So the benefits for trading futures versus spot. I'll leave all of these links in the description below so you guys can read and investigate further, because I'm only going to read specific lines, so it makes it a lot easier to understand than reading everything in the paragraph. So here, this the advantages. So a currency future is futures contracts stipulating an exchange of a currency for another at a future date and a fixed purchase price. A spot FX contracts stipulates that the delivery of the underlying currencies occur promptly, usually 2 days following the settlement date, so it takes more time. The main differences between the contracts is when the trading price is determined and when the physical exchange of the currency pair occurs. So the main differences between currency futures and spot FX is when trading price is determined and when the physical exchange of the currency pairs takes place. With currency futures, the price is determined when the contract is signed and currency pair is exchanged on the delivery date, which is usually in the distant future. So the risks involving trading Bitcoin futures or futures in general. We see here the leverage. This is the risk. The leverage is on how much you're willing to make money or lose. In other terms, right here, trading in Bitcoin's future or options is especially risky and only for clients with high risk tolerance and the financial ability to sustain losses. If the Bitcoin related positions become unprofitable, you may lose more than you invest. So if you invest in futures, guys, please don't put money you can't afford to lose. Only put money you can be okay with losing, because this game is really risky if you do not know what you're doing. Client has reviewed the risk disclosure for futures and options provided on the IB website and understands the risk described in the risk disclosure applies equally or to a greater degree with respect to trading in Bitcoin's products. Below is a list of some of the possible risks of trading Bitcoin products, but there might be other risks that are not specifically mentioned. Clients should consult, a financial advisor before trading Bitcoin products. So, and then here are some risks involved. Therefore, losses or gains are magnified. And then another might be Bitcoins and their prices may move randomly, because since no one has control over it. And then Bitcoin prices has been highly volatile historically, so unexpected upwards and downward price swings. So I'll leave, like I said before, I'll leave all this in the description below, and you guys can read and know in more detail. So this is a good thing that Binance Futures has. You could you could start off as a testnet account, so you don't have to lose any of your actual fundings. So that's a cool feature that Binance has done. So here's a bar of orders on which order you would like to do. For an example, a limit order is when you place the price of what on what price you would like to sell or buy. So you make the price and you either buy with that price or sell. But if the price doesn't go down, then your order wouldn't be fulfilled. A market order, in simple terms, is it calculates all the average Bitcoin price, and then you could just buy off the average of Bitcoin's price. So a stop limit is this is much more safe, I guess, than the other two, is because this you have a stop loss. You put a number, and then if it reaches that certain amount of number, it just exits out the price for you, so you don't have to lose more than you put in. And then a take profit limit is the opposite of the stop limit. You put a price and then you just exit out. So here we're on the Binance Vision futures contract. I'm not gonna read this whole thing, but I'll read some of it. Like I said again, I'll leave all of these links in the description so you guys can understand it further. But futures contract from Binance. Futures contract, often referred to as futures, are agreements that binds traders to buy or sell assets in the future at a specific price and date. These financial instruments are frequently used by both hedgers and speculators as a way to potentially anticipate future price movements, either for hedging against risks or for making profits. A futures contract specifies the numbers of units of an asset that will be bought or sold, as well as the price and the time at which the asset will change hands. Settlement of the contract occurs when it reaches its expiration date, at which point whoever holds the futures is obligated to buy or sell the underlying asset for agreed upon price. And then it goes into a lot of more detail that you guys can go ahead and read. A quick P&L explained is an income statement with commentary which product control products and which traders, especially derivatives, use that attributes or explains the daily fluctuation in value of a portfolio or trace the roots. So overall, what we have learned in this futures contract from Binance is it's a risky and heavy risk but heavy reward as well. If you guys do not know much about contracts and futures and all of these things, I suggest you guys not to do it because it has high risks because of this leverage. If you guys know how to use the leverage, and look, it even says here, your leverage is high, please manage your risk accordingly. So that's what I was saying. Do not always manage your risk, because these things are for example, if it does the opposite of what you want it to do, then you just lost a lot of money. So this is Binance Futures. Hopefully you guys learned a little bit about it, and I'll leave all the links in the description below so you guys can investigate further. And yeah, hopefully you guys enjoyed this video. I'll see you guys next time, and yeah guys, bye.